Well, hello there and welcome to the channel. It is your brand new best friend in stocks, dividends, and options. This is the Wealth Snowball, very first episode. I hardly know what I'm even doing, but I'm going to try it anyways because it's going to be fun. I wanted to share with you this little account over on Robinhood, show you the options that I've been trading and what I'd like to do right now, right here and now, live before your very eyes. And what is it? It's 12:17 p.m. on a Friday. Which Friday? It is February 3rd. So in the options world, we know that is expiration day. Have the AbbVie 143 put expiring today. We got this three credit spreads right here of AbbVie 140 to 138, Caterpillar 242 and a half put that is expiring today. And you can see their present values. So I'm going to be closing out some of these right now so I can free up some buying power and make some more moves. So I thought I would hop on here and share these with you. As I said, don't say it. As I said, I barely even know what I'm doing. I just started trading options probably a month ago, and I enjoy watching the videos on the YouTube of the other creators. And that's kind of what I do. I just dive in whether I know what I'm doing or not. And sometimes it works out, other times what? It doesn't. So let's start right here. We have a $68 call that I sold. Let's see, when did we sell this thing? Was it this week or last week? We sold it on 127, so that would be last Friday. We sold this call option at $68 and we earned $39. Hey, that says there's a call roll. So I must have rolled it into, earned $39 in premium there. I'd like to roll it again because it's currently at probably we can go down to what, a dollar? Probably get a dollar for that. But I'd like to roll this position into, I would say, let's look at the numbers here. I'd like to stick at the 68 bucks. So $6, that's not enough, is it? No, let's go down to February 17th. Go up to 68.39. Hey, you know what? That's enough for me. I enjoy, and it's an 89% chance of profit. We got a 14 delta, so that's all in our favor, and a fairly reasonably high implied volatility of 46.94. So let's go ahead and roll that. So we'll buy out of our current position, buy to close the current position, hopefully for a dollar, and then roll into our new position, which will expire on February 17th, and earn a couple bucks in the meantime. So let's see if we're able to fill that position right here and right now, live. Let's do it live. It didn't fill right away. Well, it did. It's full. So we grabbed that premium and was able to roll into the $68 position, which will expire February 17th. So we got that going for us, don't we? So let's go back, see what we have coming up here. We have this 143 AbbVie. Let's go down to Google. We got an $89 put that expires today on the Googler. Let's open that up. It should be about a buck. And we're not going to be able to get, probably won't be able to get much premium on 89 these days because, as you can see right here, Google is currently, as we speak, it's at 106.05, but it is down. So that, of course, anytime the stock is down, the underlying asset is down, then the put premium is going to be up. So if we look to roll that, let's check out some of what we can do. If we rolled to next Friday, what can we do? Oh, where are you going there, screen? Let's check it out. Where were we at? 89. So you'd get $3 if you rolled that to 89. But let's go up here at about what? Around 90%, we'd get $30. So at $100, strike price of $100 with an 88 0.858380. Oh, our chance of profits going down the tubes. We got a $30 premium because, of course, it shows 30 cents, but as you know, one option contract is 100 shares of the Googler, so that would be a $30. So let's go out to February 17th at the same number at 100 because I'd still like to be under 100. So if we look at $100, we'd be at 72 bucks on the premium, but let's move it down here. How's 98 sound? I kind of like 97, maybe even 96. Let's go to 96. We have 0.8 on the delta, 38% on the implied volatility. You know, and this 30 bucks minus the dollar to roll it, I'll take it. I like the premium. Says it's got a low likelihood to fill here, but let's find out. Might have to move this down to 28 to get it filled, I'd say. Let's go ahead and do it just for fun. Now we got a high likelihood of filling. Let's review that order right here and now, and then click on into it. And we filled, got our $28, rolled that position that was down to $1. You know, we didn't want to wait through the expiration today and then lose that time decay through the weekend by not being able to trade that option. Let's see if we can see our buying power go up here if we just refresh the screen. Let's refresh that screen and see where we're at. Hey, are you not doing the proper math? Where is my buying power? Maybe it already calculated it for me. That's what you get for paying attention. Here we go. What else do we have up on the agenda? We've got this Devon Energy. We have 3 of these contracts. They're currently at $2 a piece if I was to buy to close those. Devon is one of my friends, Devon Energy, because they usually have some nice premium on their volatility. Pretty much all of the stocks that I trade, I have no problem owning if I get put the shares. So Devon Energy is a great company. McDonald's, Blackstone, look at that put, 85. Blackstone's like $100 right now. Of course, that's next week that expires. I'm focusing on these to add some more buying power here to make some moves today, Friday, February 3rd, in order to catch that time decay through the weekend. So let's go ahead and close these out. And we're looking at about $2 a piece. That's fine. Do you want to roll it? Why not? Let's roll it. Roll out the barrel. It's at 61.45 right now. So this put is at 59, but it is up today. It's up just, well, about 0.75% and falling. We better get moving before this cost to close this changes. So we got 3 contracts. We want to roll into a different position in Devon on this one. So that's why your premium's not going up, silly, because you keep rolling. So the collateral is remaining. So let's go ahead and roll out the barrel on the Devon. Go down here, see where we're at. See, we already have some. Oh, that's our current position. No, that's, yeah, we do have a February 10th position on that. Come on now, let's get to the 17th and see what we can get. I'd like to go low. How low can you go? Let's find out. Can you go down low? Oh, look, I got some 54s already. I like that 54 number. I'd love to own that stock at $54 a share. So 55 would be perfectly fine too. Let's check out these numbers. 12 on the delta, and we got a 52.8 implied volatility. Devon likes to roll that way. So let's go to here, roll these 3 positions and see if we can't come up with $123 in premium. That'll buy me some McDonald's this weekend. You don't eat McDonald's, you're cutting. That's true. On a diet. On a little bit of a diet, getting ready for spring break. I see what we got there. We're going to have to change that number just a little bit. Let's try with the 41. And action. And we got that premium right there. So that's pretty cool. So there we have our notifications of what just happened. Collected some premium, real nice. Go back up. What other things do we want to look to close or roll, I should say? We've been rolling all of these. Rolling. We'll just let those credit spreads expire, of course. At McDonald's, what I've been noticing, and I'm sure you've noticed it as well, is the market seems to be very responsive, but overly responsive. So McDonald's has, I thought it was a decent earnings report, and yet the market didn't necessarily like what it heard. So McDonald's went down. Let's go to the share. Let's check out McDonald's here directly just to see what it did or what it has done in the last week. And I live in the farm fields of Valparaiso, Indiana, so my internet isn't always great. But you see where it plummeted right here. It had been in the 270s, plummeted down here. And I thought, man, if I could get into that stock at, 250s, then I would do so. So I got involved in this particular option right there. But it's pretty, it's fairly sideways. Back up here. See, we had a 257.5 right there. And what did we collect on that? Because it was just like 2 days ago, I think, that I sold that. So it was the 31st. Today's the 3rd. And then we collected 51 bucks. Not so shabby, is it? I like $51 as well as anybody does. So let's go ahead and just close this one. How's that? Let's close it out. Are we going to pay $3 for that? That's a lot of money. Is it really? It is. Oh, I do still like McDonald's though. What is it doing today? It's just down a very little bit, which means we can still get some premium. So let's go ahead and roll it. You're not increasing your buying power much by rolling them all. Yeah, but we're just, collecting some dough, aren't we? Collecting a little bit of dough. And I still got some nice premium going on here with very little volatility. And of course, part of that premium is because this is such an expensive stock. So if I was to be put 100 shares, that would cost me $26,304 bills, y'all. So we got to consider that. Let's take a look at what would be conservative. See these jumps right through here. Kind of like this. I can roll down into an even lower position. We're at the 257.5. We can roll down to the 255 and still collect some do-re-mi. So let's go ahead and do it. And we'll put it on the board. Yes. Of course, we got a low likelihood of filling. Let's go back up here. I'm a patient man in general, especially when it comes to trying to stack the dollar bills. But as far as filling option orders, I'm not overly patient. So let's go to let's go to 43. Don't mind that. So we're going from the 257.5 to the 255 on the Mickey D's. Because as long as there's fat people, there's going to be McDonald's. That's not nice. It's not nice, but guess what? It is true. Oh, you're going to have your channel canceled on the very first day. Are you going to edit any of this? Probably not, because that would be too difficult. I barely know how to use this screen recording device. So let's see what else we got here. We got this Caterpillar. I did the same thing on Caterpillar as I did McDonald's. Caterpillar went down. I thought the earnings report was just fine as well. But the market didn't, did it? So let's take a look at the Caterpillar right here. You could see, hello, look out below. So your jokes are just getting worse as this video goes on, but they're fun. Take a look at the old Caterpillar there. So we made a play on it, didn't we? What day was that? Where are you at? That was January 31st as well. 242.5 on the put. Expiring today. We collected 50 bucks. Man, big worm, he just smoked a fool. 50 bucks. You're going to have to edit this if you do know what that movie I'm referencing right there. Please leave that in the comment below and we'll take a look right here. What do you want to do? Roll this thing? Roll out the barrel. Let's see. So this week it's down 6%, over 15 bucks a share. Today though it's up $2.70. So I'm probably not going to mess with that. We'll probably just close it. You want to close it? Let's see what we're working with here. $4. I'd rather have the $4. But we do want to see this go up. It's trickled up, as you can see, because I've rolled those options down into a little bit less collateral, so that buying power has gone up. Let's just blow this caterpillar out at $3, and then at 4. No, I'm gonna pay 3 there, Terry. I want to pay 3, and then what do we have? $47 net on that. Buy to close right there. Release this collateral. That's right. And there we go. And action. And it's taken care of. That one is done. Now we should see a nice increase in our buying power. Hey, it's still not there. Now refresh it. You are absolutely cracking yourself up. And there's been nothing funny. You haven't said one funny thing. Hey, there we go. We're almost at 200,000. So let me collect my thoughts. We'll come back and see what we're going to do with some of this buying power, because it is Friday. It is February 3rd. We want to collect that theta, that time decay through the weekend. So we got to formulate a plan, don't we? So